Hello, welcome. My name is Raymond. In this video, what I'm going to be sharing with you is how you can flip your small account of $200 to $10,000. Okay, that might sound like a bold claim, but I'm going to assure you that this is possible because we are embarking on a 30 days challenge where we're going to be flipping small accounts like your account of $200, flip it to $10,000. Okay, now just a quick background of who I am. My name is Raymond and I've been in the Forex niche for the past 5 years. Okay, and I've garnered a lot of experience. What I'm about to share with you is something that we've done over and over again. Okay, now I want to go on a 30 days challenge and I hope you're going to be part of that challenge because I'm going to tell you exactly what you need to do, the steps that you need to take to be able to flip a small account and flip it to such kind of figures. Okay, now I wrote down some things, so I will be moving my eyes to my laptop so that I don't forget the nitty-gritty of what I want to share with you guys on this particular video. So I'm just going to go straight to the point and I'm going to give you these 5 tips, and at the end of it also I'm going to share with you the best time frame to take your trades. Okay, are you supposed to take your trades in the higher time frame or in the lower time frame, and why you should take your trades at the time frame that I'm going to be recommending to you at the end of this presentation. Alright, so without making so much ado, we're going to hop into the nitty-gritty of what I have for you today. Alright, so now first of all, what we need to do is to establish the funds that we have, the amount of money that we have for our account. Let's say you have $300 and that is what you're going to be using for this challenge, or you have $200. So understand the amount that is available to you, and that will help you to realize the type of risk you're going to be taking or the level of your risk management. Okay, now having known your funds, you also need to know your end point so that once you reach your end point you can make a withdrawal. One of the 48 laws of power is that when you reach your target, know when to withdraw. Okay, know when to, when you've attained your success, know when to stop. Alright, so once you reach your target, for example, in this particular challenge, we are looking at moving from flipping our $200 account to $10,000. Okay, so once you get to $10,000, that means it's time to reward yourself and you should make withdrawal. So having established that, you know your start point and then you know your end point. Now the next step, okay, that you need to take cognizance of is you have to determine how much you are willing to risk at any point in time. So for example, if we are working with a $200 account, we can risk between 15% to 20%. By that it means that we have 5 lives to play around with. Okay, and if you have 5 lives, you have that mindset that okay, you just have 5 trades to take, then you should make sure that any trade you're going to take, it's something that has high probability, like you have made your analysis very, very carefully and you take your trades. Perhaps in situations where you take your first trade and you're running into loss, you take your second trade, you also run into loss, and then by the third trade, that means you have risked about 60%. You are still running into loss. What you should do at that point is to take a break. That's what we call apply circuit breaker. Take a break off the market for at least 30 days. That will help you to, go back again and do your proper analysis. Okay, because once you get into the mindset of trading and over trading, okay, probably you have a loss and you're trying to catch up with that loss. You're trying to make sure that you win the market. So by that, you are involving a lot of emotions and your decisions might not really be objective. Okay, so that's step 2. So the step 3 in this process is for you to have a certain level of skill set. Okay, now Forex trading requires some level of skill set, experience, and following a particular trend or a particular pattern over time consistently, okay, and not jumping around. So what I mean having a particular skill set, we'll talk about using the top-down analysis to analyze the market. So I'm talking about technical analysis, not some form of indicators or things like that. So we're going to be doing what we call top-down analysis. And what that simply means is that we analyze our market or analyze the chart in a higher time frame, watch out for the trend or the direction where the market is moving, and then take our trades in the lower time frame. So for example, if I go to the monthly time frame and I look at my chart, so I could see if the market is saying I should buy, or if the market is buying, or if the market is selling. So that will help me to understand the direction of the market. So it's like you Google map when it comes to Forex trading. So when you look at the monthly time frame, which is the higher time frame, okay, now you go down to the weekly time frame and you could see that the market is still moving in that same direction. Make sure that, okay, at that point the market also corresponds with what you have discovered or the analysis you have made at the higher time frame. So what you want to do is to take your trades, and once it is moving in your direction, you lock in your profit. Of course, it requires you to hold your trade for some kind of a long period of time. Today you might have 1,000 in profit, tomorrow you have 800, next tomorrow 1,200, and it goes up and on like that. Okay, so what you need to do is to make sure you lock in your profit so that, okay, it doesn't eat into your profit that much. Alright, so the step 4 of what we need to do is to trade in the direction of the market. Take for instance, if you are swimming in a river, okay, you don't want to move against the tide, or you don't want to swim against the direction of the flow of the river. So you want to flow or swim in the direction of the river. That's the same way it applies to the market. So you want to trade in the direction. Don't try to trade against the market, okay, or so that you don't trade against resistance or have much resistance in your trade. So you do not want to buy or sell at resistance levels, okay? So you want to trade at value area, where we say value area will mean a point of confluence where you have your trend line, your Fibonacci, and your support converge, at a point in your chart. So at that point is your value area. So most likely, anytime you take trade with such kind of convergence or at that confluence point, you are likely 9 out of 10 times to beat the market. So the 5th step that you need to do while you are flipping this account is make sure to click the withdrawal button once you reach your goal. And when you withdraw, give yourself a treat, okay? Buy yourself good stuff, okay? Change your clothes, buy things that makes you happy. Like there's a way it kind of rewards the brain, okay? And it makes you feel accomplished, that you have achieved something. So once you reach the point, step number 5, where you have reached that goal, the next thing you want to do is to click the withdraw button and go give yourself a treat. Okay, alright, so like I told you in the beginning of the video, I was going to share with you also the best time to take trades, okay, from experience. Okay, these are the best times to take trades, and you're going to have a better or a more profitable trades most of the times if you follow this. Now we're going to be looking at the different time frames. Like I talked about sometime in the beginning of this video, I mentioned the different time frames, but I'm going to go deep into it right now. And let's start with the higher time frames, like the monthly time frame. Okay, now so the monthly time frame, usually the candles are very big, and it takes a long time for a particular candle to form in the monthly time frame. That's to say, it takes a whole month for a candle to form. So that is actually where you're supposed to get the direction of where the market is going. It's not where you take your trades. Okay, at the monthly time frame, you're going to see what the market is saying, if the market is going south or if it is going north. And once the market is going north, okay, you look at the analysis and you say the market is going south or is going north, okay, that is where we are going. That is what the market is pointing towards, and that is where we are going to follow through. All right, so your monthly time frame is more like your Google map. That's what gives you direction. That's what gives you direction in the forex market. So let's look at the weekly time frame. So this is where we want to plot our key levels, and we want to look out for patterns. We want to look out for major supports and resistance, okay, and we want to look out for patterns like head and shoulders, double bottom, and we want to make sure that it still aligns with with the direction that the monthly time frame has given us. Okay, so this is where we plot our trend line and plot our key levels. Okay, now like I said before, this is also where we want to look out for what we call the confluence, the meeting point, where you have your trend line, your Fibonacci, and your support meeting at a point that is where the market converges and is giving you a definite direction at that point. So if the market is moving southwest, definitely you want to click that sell button. Okay, that is what we do at the weekly time frame. Then we'll come down to the daily time frame. So this is where you identify the most immediate trend within the overall trend. But that I mean, okay, you can start looking at for trading opportunities, and you start looking at the oscillating charts. Of course, in the daily time frame, you're going to be seeing the ups and the downs of the market, how the market is oscillating. Okay, so that's where you want to look at for trading opportunities. All right, and also make sure that it is still aligning with the direction that we got from the monthly time frame. Okay, so moving from that daily, we'll now go to the 4-hour time frame and the 1-hour time frame. So this is actually where we want to place our trades, and this is where we want to take our trades. So moving on to the 1-hour time frame and the 4-hour time frame, what we want to be looking at for is the trading opportunities, the point where you want to make a trade. For example, if the direction of the monthly time frame says southward, that the market is selling, okay, so when you come down to the 4-hour and the 1-hour time frame, you want to look out for that perfect timing to place your trade. After you have done your analysis, to place your trade for a sell. Okay, so sometimes you want to risk as small as maybe 30 pips to make over 400, 500, 1000 pips. Okay, all you need to do is, as time progresses, you lock in your profits. Okay, so remember, what we're talking about is how we can flip a small account to a big account. How we can flip from $200 to $10K. Okay, so it is not by jumping in and out of the market. It's by making analysis through what I have talked about in this video. Doing your top-down analysis and taking your trades after you have done a thorough analysis of the market. Okay, and you can infer thousands of pips into the future, okay? And just take your trade, relax, monitor your trades, lock in your profits, and smile to the bank. All right, so that's exactly how to flip this type of accounts. Okay, so guys, if you are getting value from this video, make sure to give this video a like and make sure to subscribe to my channel. Okay, like I said, we actually starting a new challenge, and that challenge is to grow our account from $200 to $10,000 within 30 days. Okay, so if you're interested to join this challenge, make sure you click the link around this video or check out the description of this video. Click the link and you can join us in this challenge. Of course, in this challenge, what we're going to be providing with you, we're going to be providing the signals, we're going to tell you the times to take the trades, the point to take the trades, and how to monitor the trade, time to take profits. Okay, we're going to be like walk you all the way from beginning of the challenge to the end of the challenge. So we're going to be with you and we're going to see the gains, we're going to see the losses, and we're going to see everything together. Okay, and at the end of this 30-day challenge, hopefully you're going to be smiling to the bank. Okay, now what you just require is click the link in the description of the video or around this video and join the challenge. Just make sure that you have up to $200 to deposit into your trading account. Okay, you're not giving anybody any money, just have the $200 to deposit into your own trading account and you are eligible to join this challenge. All right guys, so I hope you got some value from this, and I will see you guys inside the challenge, and I will see you guys at the top. Thank you for watching, and bye bye.